Hello everybody and welcome to this weekend's market update video. So again, these videos, at least on the weekends, are there not just for the everyday trader but also for the long-term investor as well. So we're going to look at the intraday charts to see what happened within the day. We're going to look at the daily charts to look at the week, and then we're going to go from there and look at more of the long term to come up with some potential scenarios of what might be happening in the markets in the near future. Now let's look at the intraday. What happened today? We had a little bit of a gap up. Again, we're getting back to the mode of Fridays, right? That's what we tend to do. We usually tend to have positive days on Fridays. However, we've had this volatility in the past couple of weeks, and therefore Fridays were these horrible sell-off days. But notice how we've been seeing a change of character, how the sell-offs have been getting less and less severe. And today was just a continuation of this improvement. And so in the morning we gapped up, then we kind of chopped sideways, floated a little bit higher. Again, we couldn't get through this resistance, and I'll get into that. Then we came into a top right here. Then if you did some symmetry work, you could have figured out the slope that this would sell off at. And then we sold off, and then we came into this excellent support level. Again, we had a gap fill right here. We had a 50 moving average, and just the wicks of these two candles would have been a very strong buy signal. And after that, we were off to the races. We finished off at yet again all-time highs. And if you do an extension of the last three pivots, what you will see, again, let's pick this one, let's pick that one, and let's pick that one. You will see that we actually finished at this extension. So again, this is all great, but we are getting into resistance. And even if we go further, you have that 210 level that is going to serve as very strong resistance. We are extremely overbought, at least in the intraday, and I expect some sort of a pullback in the markets. Now I don't know when that's going to happen. It might happen as early as next week. I believe we'll start trading on Tuesday because next week is a holiday. Or my guess is that I have greater confidence in Wednesday or Thursday in terms of a sell-off. Again, the idea being once we get back into the markets next week, the first day probably will be a light volume day. But either way, some sort of pullback, if nothing else, we might have a stronger sell-off, but a pullback at minimum sometime early next week. And again, my reasoning here is we're seeing all these levels being tagged. So of course we put in an all-time high, and so amateurs are going to go and buy it, right? So all of this has been going on light volume, right? If you look at the past couple of days, we've had extremely light volume. So if I go to the daily, but if we go here, notice how we've had the last 5 days very low volume, whereas if you look at the previous weeks, we've had extremely high volume. And so this is just a little bit of a float up on light volume, and therefore you have to treat it with a healthy dose of skepticism, because again, you need volume to have a sustained move in either direction. And so right now the market is trying to tell us, hey, listen, we are going to go exceed these all-time highs, and we've had this bullish move since the 2nd of February. That's all great, but it's on lighter volume. And notice how volume actually, if you look at the first day where we reversed to the upside, volume has actually decreased. And so what you want to see is you should have seen an increase in volume to have a greater belief in this move. Like I've been saying, we need to see an increase in volume, and we're just not there yet. It's just, it might happen, right? We might go further up. I'm not going to deny that, but based on what I'm seeing, we're just not ready to go up any further. Now notice just one thing that I'm going off of. The 209.40 level was the level I just did with the extension. We also have a fib right here, which is a 0.886 at 209.32. So again, today's high in the SPY is going to serve as a very good resistance. So I wouldn't be surprised next week, even in the morning, if we immediately started selling, right? Because there's all these buyers that are stuck here, right? At these levels, you have this fib level, then you have this area right here. So there's going to be a lot of buyers that are going to at least break even. So again, be ready for that. What I'm thinking, ideally, I did buy a few shorts today, but I didn't go all in. And the reason for that, it's just, I don't know, call it women's intuition, whatever you want. But to me, this move up to be shorting it today seems a little bit too obvious, if you know what I'm trying to say. And so, yes, people are probably going to say, let me short this. We hit yet another all-time high. They have the memory of this recent volatility. So to me, it seems sort of like a setup, right? So I might be wrong, but that's just my reasoning. But what I want to do is, if I want to go in with a greater position size in terms of shorting the market, I want to wait until early next week. Now again, I did buy some, but I didn't go all in. So I shorted a little bit of the SPY at the end of the day, but not a full position. I only took a third of the position that I wanted. And so I'm going to wait next week, hopefully early the trading day, early in the morning. If we have a little bit of a gap up, if we have light volume yet again, then that might be an opportunity. But either way, at least into next week, I'm expecting some sort of a pullback. Now, it doesn't mean that we go back up again and make yet again new all-time highs, but it just means that for now we're going to have a little bit of a pullback. Now, I did calculate some levels for you guys. Let me look at my notes. And most of these are just based on fib extensions, so they're not exact levels to kind of go by. So I don't want you to think that they're this rule and we're gonna pivot off of there. They're just some potential levels, and they're not necessarily going to happen next week or even this month. So this is looking into the next few months if that happens, right? So these are some of the levels that I have. Let me just type them in for you guys. The first one I have is 212.97 as a calculated level. Next one, 221.21, then 224.60, and then 231.86. And again, the 210 level also seems like an obvious number. So these are some of the levels that I have. Now we are into resistance now, which is that 209.32 to 209.40-ish level. So again, that's where we closed today. So I think that might serve as at least near-term resistance. So we'll see if that holds. But then after that, these are your levels if they happen. Now again, they're only based on fib extensions and nothing else. So you will need to see other factors as well. That's not going to be enough in terms of just the fib extensions. I don't use fib extensions by themselves. Okay, so those are some levels. Write them down. Now I must say one thing though, how I determine that the market is at overbought. And here's your reasoning. So if I go here and look at more the longer term, and let's go back and just have a greater picture of the markets going into 2014. Now you'll have to excuse the mess that I have right now. But I'll say one thing though. So I use my some of the indicators. I know a lot of people say don't use indicators because they determine the past and not necessarily the future. But then again, in trading, the past repeats itself, right? So it's sort of a conundrum. How can you say don't use indicators because they're only showing you the past, but then the markets always repeat themselves? And the reason is because these indicators, they don't always use the same time periods that necessarily repeat themselves. So notice how in Thursday's video I was talking about last week repeating itself, and I posed the question whether Friday would be a repeat of last Friday, right? And it kind of was a little bit, because we did have that early afternoon sell-off, but then we rallied afterwards. So the answer was yes and no. So I was looking at the 1 week sort of cycle, and so if you used that period in your indicators, then yes, it would be correct. But things change. So if the market is following maybe 30 days, if it's repeating a 30-day cycle, and your stochastics are set at 14 days, right, a 14 period, then of course your stochastics are not going to be dead on. And that's the idea. So yes, the markets repeat themselves, but you don't necessarily know the period that repeats itself, right? But either way, so stochastics, I still think they're a good thing if you know how to use them. Now the problem with a lot of traders is that they use stochastics and these indicators as their primary reason to enter a trade. And so if you're doing that and you're trying to rationalize an entry, then it's not going to be a good thing. You have to look at indicators as something that will keep you away from a trade rather than something that will make you rush into a trade. And here's what I mean by that. So I have these indicators, and I brought in one new one I want to show you guys. So the top one are my stochastics. So the idea being is that if we're under 20, buy. If we're over 80, sell. Very simple. That's my idea, and that's all I look at. But at the same time, notice how these stochastics, they tend to linger around these levels. So for example, right here, it would have surpassed the 80 dashed line, and it would have told you sell, right? This would have been a sell signal. So an amateur would have said, okay, my stochastics are above 80, let me sell. And then they would have been stuck in a losing trade, okay? And so notice how these stochastics, they tend to linger around these levels for a long time. So if you're using them just to enter a trade, then that's not a good thing. You need to have some other main reason, and then they would just confirm that, versus them being your main reason and then, you know, there's nothing else out there. So stochastics alone are not going to help you enter a trade. But another thing that I use in addition to that is something called the commodity channel index, and that's this blue line right here. And again, very simple. If it's minus 100, it's a buy signal. If it's plus 100, it's a sell signal. And the idea is that, and this is one of my golden rules, I always make sure that both the stochastics and the CCI confirm. So I understand that the stochastics tend to linger around areas that show me overbought and oversold conditions, but that doesn't necessarily mean that that is the exact time where I will see a reversal. So what I do is I make sure that both of them are at these levels that would confirm that. Notice how here the stochastics told me on the 28th of October that I should be shorting the market, but the CCI wasn't ready. Notice how the CCI was sort of lingering around these levels, and it was very weak. And then at some point the CCI dipped below 100, and that would have been a strong sign that the market is not ready to be sold. And finally, here, right, at the end of November, that's when both of them finally showed strong signs that the market is ready to reverse. And so I always use both of them. Now, what I want to do is I want to fast forward to today, and let's look at what's going on with the market today. Notice how today both the stochastics and the CCI are showing strong overbought signals. So I'm thinking that the market is going to at least have a pullback next week. No question about it. A lot of factors are showing us that the markets are overbought. Light volume, stochastics over 80, CCI over 100. We did have the 209.30, 209.40, a lot of fib levels at that point. Actually, two different fib levels, the intraday and then the longer term right here, which, by the way, the larger fib level would go from the October 15th low all the way until this area right here, right? Which, let me see, where did I pull that? I have to look at it. So that one would have been this fake print right here. So let's just confirm that that is indeed what I have. So if I take the October low and put in this fake print that we had, I have to do it the other way. I always mess these up. I don't know why. Notice how it does confirm that 209.40 level. So again, a ton of resistance right here. So I'm expecting some sort of pullback. And early next week, if the market gives me a little bit more upside, I will be shorting the market. And I'm probably going to trade what I trade best, and that is the VIX. So maybe I'll dip a little bit into the TVIX or something like that. But again, small position size, very risky. So that's what I will do. Now, in terms of the longer term, and one thing I wanted to talk about, remember how we talked about the February 11th to February 12th being sort of a pivot point? And again, that is based on a Fibonacci time extension, and sometimes it's off. And I mentioned that February 13th might also come into play. And so what I'm thinking now in retrospect is that probably today, February 13th, was what played out. And in other words, the Fibonacci time extension potentially, and again potentially, might also confirm that today was a pivot. So again, we talked about this a week ago, how this time period would be something important. So either some event would happen in the world, or we would get some sort of reversal or some momentum gain. Either way, what I'm thinking now based on this is that today, or I'm recording this video on a Friday, today would probably be a reversal, at least a short-term reversal, not necessarily a long-term, but short-term reversal. Now, I did some more fib work, and what I'm also noticing is that there's another time frame that's coming into play. And so I did this on a daily and a weekly. So the week of March 9th comes into play, and then when I did it more specifically, I had another time period on March 11th. So I don't know if those play out, but that's just something to look into in the future. Now, what I'm thinking based on this, and again, this is just my speculation. So what I'm thinking, so here's today, or Friday. Let me put Friday, if I know how to write in this paint here. So what I am thinking, again, based on so many factors telling me that the market is overbought, I'm thinking that we're going to get some sort of pullback into next week. Now, I'm also thinking that too many people will short this market once they notice that there's a pullback, right? So a lot of people right now are excited because we finally broke out of a this sort of indecisive channel. So a lot of amateurs are going to jump on board, and there's going to be a lot of buyers, right? So they're going to be caught off guard next week. So we're going to have some sort of pullback to shake them out. And then the sentiment, what I'm thinking, is going to be the complete opposite. It's going to be, well, told you so, right? That's what amateurs are going to say. It's somehow with amateurs, it's a fight. They're perma bears or perma bulls, whereas a trader can be both, right? So the idea is going to be, well, maybe it wasn't an up move after all, right? There's going to be some indecision coming into the markets, some uncertainty, but that's just going to be a reason for the institutions to drive the market up, right? So they're going to buy the market. So I'm thinking it's going to go up. I don't know when, but probably in a couple of weeks. And then once we get into that March area, March 9th, 11th, whatever, that's when I'm thinking we're going to have a major sell-off. Now, of course, this is just speculation, so don't think that this is going to be some set rule, but that's what I'm thinking. I'm thinking that we're going to have that scenario play out. Now, again, a lot of this you don't know until you get closer in terms of time frames, but that's my idea. I think that we're going to have for certain some sort of pullback, okay, based on the overbought condition early next week. So that might happen. Now, how long that happens or how it happens, I don't know, but I think around March, around those areas that I put in, around March 9th or March 11th, we're going to have some sort of drastic sell. Again, the market is extremely overbought at these levels. And if you go to the monthly chart of the SPY, and again, this is where I have all my fib levels, so don't get scared by all these lines. Notice how we've really since March 2009 we've been going up, and then specifically since 2012, since mid-2012, we really have not had a break in the markets. It's amazing how there has not been a pullback of more than 1 month since 2012. And so at some point, this is going to have to happen. So we're going to have a longer term pullback. And I don't know if that's going to be the March time when we see that, but it's definitely something to keep in mind. The market cannot go up like this and only have 1 month of a pullback, right? So that's something to keep in mind. I did have a question about Home Depot from one follower, so I want to make sure that I cover that. And by the way, if you have a question for me, if you want me to take a look at an equity for you and just get my opinion, nothing else, in terms of a swing trade, then by all means send me a message and I will do it for you. And I want to cover those in the weekend video, so it has to be something that you don't want to enter right away, but something that you're thinking about entering, you know, in a more of a future couple of week kind of time frame. Okay, so Home Depot, as we all know, has been ripping higher, very similar to what the markets are doing, right? So again, very unrealistic to be going up from 2011 to now from $30 to $112. But that does not mean that it can't go higher, and I always stress that. Just because something doesn't make sense to you in terms of a price movement doesn't mean that it's time to short it, right? Just because it went up from 30 to 112 in 3.5, 4 years does not mean that you should short it. Now you can try it, right? And I do actually. When I see something that's unrealistic like this, I do short it. But I do a lot of research before I do that. and my stop is very tight. So for example, with a Home Depot, what would I do? I would wait until it gets to the 120 area, and I would short it at 120, provided I have some other signals that would show me that it's overbought, and my stop would probably be a $2 or $3 stop, and that's it. Once it gets to 123, I would get stopped out, no question about it. I was wrong. But then I would anticipate some sort of reversal. So again, the odds definitely when you're trying to time these are against you. So it's not the best trade to enter. But as long as you keep your stops tight, and you're very disciplined about them, and you don't hope that it's gonna sell off, then I think you should be good. Now in terms of this monthly, definitely showing us over bought signals. So notice how here it would have given us a signal right here, right? So these are not the stochastics and the CCI. Like I said, they're good to confirm a trade, but you need other factors. So notice how here you really didn't have any other factors. You didn't have a double top or anything like that. And that's the idea behind what I'm trying to say. So here the stochastics and the CCI would have told you that it's a sell signal, but at the same time you didn't have anything else, and therefore all you could have done is guessed, and you could have had that tight stop, and then you would have gotten stopped out, and that would have been good for you because it ripped higher. Okay. Now again, kind of similar to the markets, this move has been on lighter volume, and it's been getting lighter and lighter, so it's getting very exhausted, I'll tell you that. The only thing I can give you are probably some fib levels. Let me see here if I can find anything for you. So if we do this, so you might have a little bit of an area here at the 116, but again, very risky, because I think that 120 is more of a magnet for it. I would probably try this 120 to 122 area. That's what I would try. But again, it depends on how we get into that level. So if we're thinking more of a pullback in February, then this candle might go down lower. So you may not see this until May or something. But that's just my idea. I mean, notice how I'm not giving you 112 or 113. I'm giving you these far out levels, because quite frankly, that's what I would do. I would not get ahead of it now. There's no reason. I could nibble into it at 120 with a tight stop, I suppose, but nothing before that. And again, this is just my opinion. It might reverse, for all I care. It might reverse next week, and I might be wrong, but that would be my requirement for me to enter this trade. Okay, so I think that's pretty much it for this weekend update. So again, as education, keep in mind the CCI. I wanted to show you that in this weekend video. Again, the stochastics alone, I don't use them. I use the CCI to confirm, and also you have to use some other factors, especially the pattern and time. They're my primary factors, and then if the CCI and stochastics confirm, then it's a better entry. But I never go off of stochastics by themselves. That is a loser's game. Okay, so that's pretty much it. I will see you guys on the charts next week.